Good day all. Ira Epstein of Linn & Associates with your metals market update. And this update is for Wednesday, the 28th of August, 2019, approaching 2:40 p.m. Central Daylight Time. So as we look at the market, the gold market, it actually finished a little better than this. It's down about $3 right now as we're at the 2:40 time zone. Silver's up about 15 cents, certainly off the high of the day, but certainly far away from the low of the day. And the big mover was platinum, which I just did a story with for the Wall Street Journal and Dow Jones Newswire. So if you see that, you'll see my name all over it as I was interviewed. In a nutshell, what seems to be going on is interest rates continue to fall. If you get my daily commentary, my written commentary, I put in a chart of the 10-year note in gold, trying to show you the correlation that the two are having to each other, which is holding together pretty well. Yes, you can have gold down today in the note market, the futures up, it doesn't matter. You're running in a similar pattern, and that's all you look for when you're looking at correlations. Not day to day, they have to do the exact thing. That'd be wonderful, but that's 100% correlation, and it's rare when you have two different markets working at each other. The stock market's up while we keep hearing talks of recession, we keep getting economic data that's not all that bad, and we get a slew of economic data between tomorrow and Friday. Even though it's the Labor Day period coming up, keep in the back of your mind that doesn't stop the government reports from coming out tomorrow and Friday, and the market will be looking at them and looking at them hard. In the pound, we saw that Mr. Johnson, the Prime Minister, has called for, if you will, an early recess, an end to Parliament session, if you will. And people will say, well, that's political. They don't quite understand that this is the longest session of Parliament in many years. It's 2 years old. Typically, it runs a year. Then the Queen gives her address and Parliament starts again. So admittedly, you got Brexit, and that becomes a big issue. So look for a no confidence vote to be coming out. And that might be offering a little bit of a bid to the gold. But countering that seems to be in Italy, they're getting together to form a coalition government. And if it looks like the way I think it's shaping up, Mr. Conte's going to come back, and that'll be a different, he was Prime Minister, resigned, but the opposition to him is stepping down, and that's very, very important. Give him more of a free hand, I guess. So Europe seems to like that. You wouldn't know it by being down 15 points in the euro. Last thing before we get into the charts, keep in the back of your mind that about 2 weeks from now, we start up with the central bank meetings again, and that's going to get very interesting. As we look at gold on a weekly chart, it's up $11, and right now, if it were to finish the week out, this is the best close it's had in a very long period of time. But what we're getting is consolidation. For the past 3 days, this was your peak, and now you're just sort of coming in here, hanging around, not going anywhere. The chart action ended up actually a little better in terms of just swing lines. Now you've got higher lows and higher highs. Should you take out 1535.30, you negate the uptrend. Could that start a downtrend? Well, unless you were to get back over 1565, it could end up with lower highs, lower lows, should that occur. What about where the key averages are? Well, you can do that, but that's just putting into play the possibility of getting back to the 18-day average. In other words, I don't see anything yet, barring a washout in gold, that starts this market into a downtrend, but I do see the opportunity, if it takes out 1535.30, to give a big pause to this part of the uptrend. That's important. Where's the market running into resistance? I want you to look at the Bollinger Band here. Today's high was 1556.60. The Bollinger Band's 1556.40. That stopped the market, and it's pulled back $7 from there. So as far as I'm concerned, so far, the first challenge of the Bollinger Band is still where the pros took money off the table. When we look at momentum, you're overbought. I have an overbought market that is in a resistance zone in an uptrend. Bias still up. When I come to GLD, you have a market with higher lows, higher highs. Now, as I often say, sometimes GLD leads the futures. I'm looking at this, and while I said the other market, the futures was overbought, both numbers today are over 80, right? Yesterday, both numbers were over 80, and the day before, both numbers were over 80, and the day before. You have an embedded reading. An embedded reading means until the market takes that red line and it closes under 80. The odds favor that pullbacks in this market continue to be well bought, with the market still having the possibility of getting up to the upper Bollinger Band, 146.05, about $1 from here higher as the resistance point. In GDX, you're overbought, like the futures markets. You're higher high, higher low. Now, you went up, and on the first challenge of the Bollinger top, 29.93, the market stalled, went a little bit higher, went about 60 cents higher on this day, and today it lost back some of that at 30.49. Now, the settlement's not in, I admit. It's not 3 o'clock, but we're pretty close to where it's going to be. Therefore, I have an overbought market with upside bias, trend up, and it's hit an upside target that it's stalling at. In the gold-silver ratio, as I said yesterday, it's a big breakout to the downside. Silver is gaining rather markedly on the gold market, and it can march in that direction as we've seen on the other way that it did it for a very long time. This break back here is the most logical target of about 81 in the market. That's about 2 full ounces of silver less to buy an ounce of gold. When we look at silver, it's very overbought. Yes, it has an embedded reading, but it's 2 days in a row over the upper Bollinger Band on one of these thrusts. I would not be surprised if profit taking at any point sets in to take the market back to the right-hand side of that. That number's 1827. It's about 20 cents from where we're at, but that number's climbing every day. If you look at this 1827 number, yesterday was 1807, the day before 1778. Therefore, the first challenge of the Bollinger Band didn't stop the market. It's markedly improved from there, about 40 cents, but I think it's getting a bit overdone, so I'd be cautious. In the in the copper market, we're still very much in a downtrend that could end if you take out the high of Tuesday, which was 257.70. That could give the market right back into the resistance point of 258.35. The momentum has been correcting from an oversold condition. I still see that as the resistance point. The trend is down. Could the trend turn up here? It could. With a close over 258.35, you could end up with higher lows, higher highs. So the bears have to defend the position literally right in the zone and not let it get beyond that 18-day average on a closing basis. In the platinum market, I don't know what got in this market today. It just popped. It's overbought, up $35, as you could see. That's a huge rally. It came out of very much sideways action. Do you disagree with that? You can see where the Bollinger Bands were. The trend has been up. Before today ever happened, the markets had higher highs, higher lows, an uptrend, but it's getting into overbought territory. That didn't stop the market from a $35 gain. If you look at the palladium, it's still very much lumbering along. It had its run. It had a phenomenal December through mid-year, and since then, since this pause up here, the market has pulled back and hasn't had the vroom that we're seeing in some of the other metal markets. Why? Don't know. I can't answer it. They're both used, as you know, for EPA and cars and truck engines, and we'll see what happens with it. But the market looks a little tired right here. In the dollar index, I'll call this neutral. Higher high, lower low, just wandering back and forth. And I realize everybody talks the dollar strong, but when you look at the chart, it's not trending. I don't call that a trend. The bias is up, momentum is up, but it seems to have run out of its verve, might be the way to call it. I'll talk about all this and more. In fact, I've already written my evening report because let's face it, we're getting into the holiday period. I'm here to cover for people, and that's what I do. I'll be, in fact, tomorrow, I think, on BNN TV. That's Bloomberg in Canada, so I still have my TV commitments to finish up. But mentally, I want to go on for my few days here. This is what my written reports look like at night, in case you've never seen them. They tie together with my morning videos, my oral commentaries I make twice a day, and I do 2 of these a day. I get one out by 11:30 typically every morning, and that's Central Time, and then one before 8 p.m. at night. I talk what to expect the next day or what to expect the rest of the trading session. trade ideas with it, giving you ideas of where to go, how you go with it all. How do you get access to it if you have not tried it before? It's really simple. Go to our website. You'll see our free offers. Sign up for it there. Call my staff if you want. They can get you signed up. Or you can click right here if you're watching me on YouTube, and it'll take you there. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.